Hello guys, so on this video I'm going to be showing you guys how to use your Fibonacci tool correctly, how to take very important trades using your Fibonacci. So now guys, listen. First of all, we have to understand there are different kinds of Fibonacci, but the Fibonacci I want to talk about on this video is a Fibonacci retracement tool. But I have to kind of make you understand what exactly is a retracement. So now let's assume this is the market going up, right? You understand something about this price action is that the market doesn't just go doesn't just probably move up from point A to B in straight line. Like what you will see the market doing more often than not is that the market will move in waves, right? The market will move in waves. While it is on its way upward, it still doesn't just move straight up. It moves in waves like this, right? So what is a retracement? A retracement is a temporary downward move from the original move of the market. Like I said, when the market is moving upwards, so this particular time when the market starts coming down is called a retracement, because the market is also going to continue the upward move. Then it's going to make these retracements, then it's going to go continue the upward move. So this temporal downward move that is opposing to the trend is called retracement. So how you're supposed to take your trade in a trending market is that you're supposed to wait for the retracement. So when the market is going up, you're not going to buy on this particular leg. You're going to wait for the market to make that retracement. It is on these retracements you can now find a buy on this port, and the buy will now take you up. Then when the market makes another retracement, you're going to find a buy and the market will take you up, right? So retracements help us to enter the market in a trend. So you don't just jump into the market. You don't just go to the market and see that the market is in an is just going up and you place a buy. No, you're going to see that it's in the uptrend. Then you're going to wait for the retracement. So retracement will bring the price a little bit low for you so that you can buy and expect a shoot up of the price again. All right. So that's what we do. That's what retracement means. So there is a tool called the Fibonacci tool. The Fibonacci retracement tool is one of the most powerful tools for finding retracement area. So now the question is this: as the market was going up and starts coming down, where does it get to before it begins this upward move again? That is the essence of the Fibonacci retracement tool. The Fibonacci retracement tool tries to help you find out where that price we get to before we can start going up again. So I'm going to go into the chart and we're going to try to understand what that means. So now this is a volatility 75. So we're just going to try to understand. Now listen, you can do this on any chart. You don't necessarily need these particular synthetic indices. You can do it on forex, crypto, whatever thing you're trading. All right, good. So I'm going to show you the powerful way to trade these Fibonacci. Now what you want to do on this particular chart is that you want to first of all identify the trend. First, you have to know what the market is doing before you're able to know what to retrace, right? So right now you can see that the market has been able to sort of break a certain trend going up, right? So what we're going to be doing in this market is that we're going to pull out our Fibonacci retracement tool. So now you're going to go to your objects, then you're going to go to add objects, then you're going to scroll down, then you're going to see your Fibonacci retracement here. So you're going to click on that retracement. So what you're going to do is how to draw the retracement is if price is going from say this point to this point and it starts coming down, then this particular downward movement of price is potentially a retracement. Why? Because we've been able to spot from here that price has been able to break this particular trend and gave us this 1 2 3 move. So anytime price is coming down, we are going to want to suggest that price is just making a retracement. So we're going to pull out our retracement tool and begin to draw our lines. So what are we saying? If price is moving from here to here, anytime price is coming down, it will be called a retracement because it wants to come down and, like I showed you, find a spot and start buying. So we're going to pull out our retracement tool. So I'm going to do that again. We're going to pull out our retracement tool. Sorry, let me do that again. We're going to touch the bottom and we're going to stretch it all the way to the top before the retracement started happening. So this is how you do it here. So you take it to the bottom and you stretch it all the way to the top. So you can see what I'm doing. I'm just trying to make this 0.0 be equal to the top of the market before it started coming down. So as the market started coming down, what you will notice is there are different Fibonacci ratios. You have the 23.6, you have the 38.2, you have the 50, and you have the 61. Now, the 38.2, the 50, and the 61 all serve as the golden Fibonacci ratios. So anytime price gets to the 38.2, the 50, or the 61, people that use the Fibonacci trading tool are always very happy because it's somewhere around this point that the retracement is going to happen. But listen, you're not just going to use the Fibonacci alone. You're going to pull out, you're going to be able to spot where the support zone is. This is how to trade, guys. So it's like a confluence of trading ideas. For instance, we know that the market is coming down just to make a retracement, right? But the thing is, it can make the retracement anywhere. It can make it here and shoot up. It can make it here and shoot up. It can even come all the way down to this point or whatever and make that retracement and still shoot up. But where is the perfect place to wait for this retracement? So I'm telling you that the golden Fibonacci ratios are 38.2, you have 50, and you have 61. If the market is able to drop down to these areas, and you can see that these areas also serve as good support and resistance. So you can see how the market came down here, bounced off this point, broke it, came out, made a touch, came down, broke it, came out, bounced off it. So this particular zone area here has in the past served as a good support. So if for some reason you can see that the market comes down to it, and that is a good, and that lines up with our 38, 50, or 60 Fibonacci ratios, we will be able to become very, very happy men around this point. So what do? This is at this point you now begin to find an entry, and there are different ways to find an entry, guys. So you can see how this market was able to give you a very good retracement. So the market came down, you got your retracement, and you're able to take the buy. So there is a way to enter this market which you have to also try to study. And if you go to the lower time frames, you can go to the lower time frames to find an entry. And I'm going to tell you guys how to find different types of entries, right? So some entries, when you go to the lower time frame in this place, you can be able to find maybe a W pattern, a head and shoulder pattern, and other different kinds of pattern that will help your analysis to know when this buy is about to happen. So, like I said, the first thing you want to do is to know is to find out the trend of the market. So you can see that the market has been able to break this trend, came up and went up. So there is a potential for an uptrend. So because we have already understood the trend, the next thing we want to wait for is the retracement. So the retracement came, and as the retracement was coming, we pulled out our Fibonacci tool and draw where the potential retracement will be happening. So since we're able to get where the potential retracement will be happening, we're able to also spot that even that place was a good support and resistance zone. So at this particular point, we will now go to the lower time frame. So this is a 1 hour time frame, guys. So you'll now be able to go to the lowest time frames to see if you can spot a very good entry for yourself. So guys, this is how to trade the Fibonacci. This is how to trade the Fibonacci. So you can even still extend again and see what happens. So you can see how the market was able to, from here, break this other place, this resistance that pulled it down before. So that is fine. So you can see how the market was able to go. So what we're going to do at this point, since the market started coming down, at this point you're supposed to also pull out your Fibonacci again and see. So now you can see from this point that 50, 61, these were good, like good Fibonacci place. So this is where the market is at currently, right? This is where the market is at currently. So you can see that the market was able to hit this our 38.2, 50 and 61 Fibonacci, and you can see how the market is making a good retracement. So what you ought to do at this point is that you're supposed to go all the way to this left hand side and find a good support. So now currently this is what the market is doing. So we're supposed to come to this particular point, find very good somewhere around this point. You can see how this particular point in the market has been able to be of good importance. So you can see how the market came up, hit this point, came down, went up, hit this point, came break. So this particular zone area has been a very, very, very good support. So now that the market has dropped down all the way to that area, does it mean we are going to enter at this point? No, we're not going to enter. This is the point where you now begin to go to the lower time frames to find a pattern and see what exactly the market is doing. So for now, the market hasn't given you a very good pattern. So what you'll be looking for at this point is maybe you're going to see something that looks like maybe the market comes here, hit this place, comes, hit this place. You're going to see like a W or a head and shoulder pattern or something interesting happening, like a triangle or something like that just happening around the zone, and you're going to take it at the breakout of that place. So guys, this is how to trade using the Fibonacci and become very, very profitable. Now, it's possible for someone who didn't understand this method, that just thinks it's all about putting the Fibonacci, to probably have come here because I said this is 38 points, 250 and 60 golden Fibonacci. So he just comes here, and because the market is probably going up on 50, he starts buying. No, this is not how to buy. You can see if he had bought from this place, the market just came down, and he would like be in a loss. The best thing to do for this particular guy is he's supposed to be able to find where the market is, the structure of the market. So you can see how I'm able to find that the market was bouncing off the zone. So this is the particular zone where you're supposed to come and take that particular buy and be able to make profit on this market. So I hope this was helpful, guys, and I'll see you guys in my next video. Please do like and subscribe.